Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's video, we are doing a very quick and special episode because a lot of people in my Telegram community and the YouTube community have started asking me questions on Kaynes technology and why this company actually fell down 7%. And it's not just Kaynes because even Sirma has fallen down, Amber has fallen down, and a lot of these companies are having big troubles. So I thought I'll quickly, in 5 minutes, explain everything to you because it is something very interesting and I thought even from a learning perspective, you should definitely watch this video. So stay tuned. Now let's get quickly into the video. So if you look at the chart right now, if you see Sirma, which is a company in the similar space, has also fallen down. Dixon is still holding up, but Dixon has also fallen down from its peak. Amber Technologies has also gone down quite aggressively, and these are all companies with favorable sectors. And Kaynes, which is now in the limelight, has actually fallen down almost 7.75%. Right, there was a problem that happened, and I will talk about what that problem is. In fact, the management came on the TV, came on CNBC, and even spoke about this problem, but the management's answers were not taken into good consideration by the people, and obviously the market started falling a lot. And this company was trading at a very high 100 plus PE ratio. So when things like this happen, it becomes a big issue, and you can see the volume is also quite heavy. But what actually happened here, right? 38% collapse of Kaynes in the last few days. What exactly happened, right? In the last 2 months, 38% down. Today, 7.75% down, right? And this was because there were problems, okay? There were problems in their annual report filings and in their account statements. So basically, Kotak Institutional Report, Kotak Institutional Research came out with a report highlighting all the problems that they found with Kaynes technology. And the problems were quite scary. So if you want, I can quickly go into that report also. As you can see, this report came out on December 3rd. This is an ESG report by Kotak Institutional Securities. And let me explain everything in a very simple term for you, okay? So basically, couple of problems have happened in this entire problem. I mean, in this entire accounting statement. But let me show you everything, and they've even given proof of the problems that are happening. Now, first, you have to remember a few things. This might be accounting heavy, but from a learning standpoint, it is a gold mine. Now, there's a company called Iskraemeco. Okay, so Iskraemeco is a company that Kaynes recently acquired for around 48, 49 crores. No, actually, a little more than that, they acquired, right? And let me show you what are the problems that has happened, right? So Kaynes reported 2025 revenue of 2,700 crores, up 51% year on year. So Kaynes, when they came out with their annual filings, they said our revenue went up 51% year on year, and we made 2,700 crores in revenue, slightly below the 2,800 crores guidance they had given. Now, this was aided by the consolidation of their acquisition, Iskraemeco's acquisition, which is a smart metering business for 6 months. They basically bought this company for 43 crores on September 30th, 2024. Remember all of this. Based on the profit reconciliation statement of Kaynes, Iskraemeco contributed 48 crores, which is 48 crores, 44% increase in PAT over here. So basically, from the annual report of Kaynes, when they showed they had 2,700 crores of top line, out of that, let's say 44 crores came from Iskraemeco's acquisition. Right, so very interesting. Basically, they said that this 48 crores profit occurred after the acquisition came in over here in H2 FY25. Now, when you go later, you will see more funny things as well. We will understand a little bit more. But what happened is, Iskraemeco's reported annual filings only showed 60 lakhs of profit. So, Kaynes bought a company. They paid 48 crores for that company. And then they said that, this company had a profit after tax also of around 48, 49 crores. And they showed this into Kaynes revenue. So when Kaynes gave their revenue, in that they showed Iskraemeco's revenue of 48 crores. But if you go to Iskraemeco's company and open their annual statements, there the reported full year profit after tax was 60 lakhs in FY25. So how did that happen? It also showed a 28% net margin, which was very, very, very high in a smart metering business. So this was problem number one, right? Now, Kaynes obviously has come out and given answers to all of this. They also showed that there was a 48 crore loss in H1 FY25 to reconcile with the full year profit of this. This is in context of profit. No evident cost drivers were there for such a big swing. Suddenly, they showed a loss of their entire revenue, but Kaynes adjusted it as profit in their books of accounts. And I'll show you all the proof of that as well that they put in this report. Number two, Goodwill. So whenever you acquire a company, let's say when Keynes went and acquired a company, you put some of that amount into goodwill. But Keynes did not put the amount into goodwill. In fact, they put this in general reserve, right? Instead of putting it in goodwill, which is always there when you do an acquisition, they put it in something called general reserve, and they put it as an intangible asset. Okay, that is not technically allowed. It is allowed, but it's not technically allowed. And I'll tell you what was the reason behind it. They basically said that when we bought this company, we did not buy the company for the company, but the company had a contract of, let's say 48 crores. So we basically bought that contract, not the company. We bought the contract. And that contract, because it can't go into fixed assets, it goes into intangible assets. Now, the advantage is with that contract, I can get a loan or bill discounting tomorrow. That is why. But on goodwill, I cannot get a loan or bill discounting tomorrow. So here is the statement. As you can see here, management clarified that since a major part of the consideration is for a contract that Islamico has entered into, it was recognized as an intangible asset and netted off against goodwill, and it will not be in a part of goodwill. Now, this intangible asset, which is a contract, can tomorrow be leveraged for anything else. It is an asset, but I can get money from that asset, right? And that is why they show here that we observe that the consolidated balance sheet does not show a corresponding increase in goodwill. In fact, they show a net negative goodwill adjustment of 1 crore. It's actually gone down by 1 crore. So this is again very interesting. Again, we will go more deep into it. Now, the second problem here, the payment for these acquisitions, which was 72 crores, okay, almost 88 crores less consideration, let's say 72 crores that was there, has not been showed in cash outflow, right? So the payment to do these acquisitions were not shown in the cash outflow in Keynes's report. That means it did not highlight the real numbers, and that again becomes a problem. Now, management stated that these investment subsidiaries are eliminated during consolidation, so these payments are not shown in consolidated cash flow, which is again not a good way to do it, because if you are doing an acquisition, you have to show everything, right? Coming to now the third biggest problem that many people got scared. Now listen to this very carefully. Related party transactions. Okay. Now this is very important, because in any company, when you do related party transactions, it is a scary thing. What is related party transactions? Me sending some money to another company, but I have my wife there, or it is my own company and I'm transferring money there. Right. So you have to be very clear, and SEBI has this rule, or accounting statements in India also have this rule on Companies Act, that you have to show related party transactions if you're transferring money into someone who owns that company. If you only own it, you have to show how you have transferred it as well. Now comes the fun part. Here, there were many intercompany related transactions were there, but no disclosures were made. Disclosures were not made properly in this. For example, they said Istramico's related party disclosures show purchase of 1,800 crores from Kaynes Electronics. That means Istramico has bought something from Keynes for 1,800 crores. That means Keynes could show in their account statements that we have done sales of 1,800 crores, but they've done it to their own subsidiary. So Istramico has showed this. But this same sales has not been reflected in Keynes Electronics accounts. They said we got the sales, but they did not say that the sales was to their own company. They said the sales is there. They did not say the sales is to their own company. Basically, I have just taken 1,800 crores. I have taken an order from my existing company. Istramico only billed Keynes and said, give me 1,800 crores. And Keynes in that top line has said, we got sales of 1,800 crores. But they did not say that this is to their own subsidiary. Another problem here. Year-end payables of 3,200 crores to Kaynes Technology and 1,800 crores to Kaynes Payable. So if you look at Istramico's account, which is Istramico company's account, they have to pay 3,200 crores to Kaynes Tech, and they have to pay 1,800 crores to Kaynes Manufacturing. They have to pay that. And receivables, they have to receive 1,900 crores from Kaynes Tech. Again, none of these are reflected in the related party disclosures of Kaynes Technology or Kaynes Electronic Manufacturing. Both sides, it has not been reflected. Almost 2,000, 3,000 crores of money that is supposed to go in or come out has not been reflected by Kaynes. And it's not said that it is for Istramico, which is their own company. So they've shown it as if it's new, right? Again, becomes a big problem. Again, because of all this, the capex requirements is going to go up, because they have shown in their cash flow, okay, that we have got sales and we have a lot of money, but technically they don't. And that is why it is going to become a big problem. Now, I'll show you the proof here, right? Because I don't want to waste too much time. We'll go straight into it. Now, here you can see, if you look at, this is the consolidated net profit of this is Kaynes Technology, okay? The parent company, it's here, Kaynes Technology. The amount is 209 crores. As you can see here, 209 crores is the profit and loss, share in profit and loss. So 209 crores is coming from Kaynes. But if you see Isramiko here, which is a subsidiary, 48 crores is coming here. And 16.65% is the contribution to this. So Kaynes Technology parent company is 71%. 16% is coming from Isramiko, which is 48 crores. Understood? That they're saying this is the share in profit and loss. So the share in profit is 48 crores. Very good. No problem. We will go down. Now, if you look at Isramiko India Private Limited's actual profit and loss statement, which is again in INR millions, here they're showing that in FY25, they only made 5.87 crore profit in INR million, means 58 lakhs. Technically, they made profit. But here they have shown 48 crores as profit. Okay. That is point number one. And that is a huge lapse. Now, if you look at AOC 1 filing, which is something that Isramiko has filed to the government of India, AOC, here they have actually shown that we have a net loss, profit after tax for FY25, we have shown net loss of 50 lakhs. So in Kaynes balance sheet, you have, in Kaynes profit and loss statement, you have shown 48 crores as my profit. And in actual, it is minus 50 lakhs. So a lot of accounting left, right. Here you come to Goodwill. As you can see, Kaynes reported 88 crore purchase consideration for Isramiko. They have said here that we have considered for 42 crores for Isramiko and 45 crores for Sensonic Group. But if you look at the Goodwill has gone down by 1 crore. And what they have done is, in the acquisition of subsidiaries, they have put that under general reserve. In reserves and surplus, they have put it under general reserve, which is mind-blowing. And if you see, they put it under total other equity has gone up because they put it under general reserve. Okay. And there is no mention of the cash outflow of this entire acquisition. Right. And that is what is mind-blowing. If you see the intangible assets, software is here, and they have added technical know-how as 115 crores, which is the acquisition cost. So they've added technical know-how as an intangible asset over here at this kind of a value, and that is why it comes over there. So again, these are very aggressive ways of doing things, right? If you see here, investment in subsidiaries comes to 80 lakhs. So a lot of places where nonsense has happened in this accounting statement, which Kotak has basically highlighted very aggressively, right? See, Isramiko's financial statements mention purchase transactions with Kaynes Electronics. And here it says, this is Isramiko's financial statement. Here it says they have, it's a fellow subsidiary, Kaynes Electronic Manufacturing, and they have purchased this month 1,797, which is INR million. So 179 crores has been done, right? Now, Kaynes Manufacturing financial statements does not mention any transaction with Isramiko. They don't show anything. They've just hidden it or maybe not done it. Okay. And this is what the problem is coming here, right? Now, Isramiko's trade receivables and trade payables, which is the amount they have to receive from Kaynes, is 1.9, and which is almost 1,900 or 190 crores or whatever it is. And trade payables is 3.2. I think this is INR billion, right? Yeah, rupees billion. It's just unbelievable. It's just unbelievable the way it's played right now. Okay. Now, why is this? Okay, I don't want to go very deep into this report, but this report has a lot of information on whatever has gone wrong and it's not being shown in the cash flow and all of that. But coming to the stock price, look at this. Now, the management has come out and given some reasons for it. I'm not saying everything is wrong. There are aggressive ways of doing accounting. There are non-aggressive ways of doing accounting. So I'm not going to say everything is wrong. But this is definitely not a traditional way of doing accounting. And because of that, when you're trading at such high P and you're spinning a story of such great stuff, market will definitely get annoyed with this. Market will definitely get irritated with this. And whatever premium you had, the market is going to say, Shashank, Tata, bye-bye, see you. We are not happy with this until you figure out an answer or a statement to this. And this is exactly what is happening with Kaynes. And because of that, people have now got worried for the other companies, which is Amber and Sirma, and they have also started going down. So if you are watching this video and you're trying to understand why things went down, it is because of this accounting mismatch. But again, me and you are going to get a lot of learning from things like this. And that is why it is so important to keep reading institutional reports like how I do. But if you don't have the time, you can just watch a 15-minute video where I've explained what is going on in very short and simple terms. So if you guys enjoyed this and like this, please click on that like button and share this video with your friends who might have had Kaynes or Amber so that they should know what is happening in this space. This is me, Shashank Udupa, signing off, guys. Take care. See you guys. Bye-bye.